Alrighty, guys. So we're going to be looking at a demonstration for this exercise daily assignment, which is going to hopefully help you understand what we're talking about as far as the trial balance, the adjusting entries, and then the adjusted trial balance, and then be able to prepare the income statements that are coming over with them. So this is once you download your spreadsheet. This is what it's supposed to look like. Notice it already has a trial balance in it. What you need to do, of course, is make sure that you go into view, make sure that you go to page break, bring everything over so that it all looks nice and pretty, okay? And notice that it's just one worksheet because you have your trial balance, adjustments, adjusted trial balance, income statement, and your balance sheet that we're going to be working with, okay? So when we first start out, we're going to be looking at the ending that you see. You've got your counts already here, and the fact that they've got $70. All right, this is for Jay Revere for his data. Okay, now on the page that we have, it goes ahead and it tells us that we also need to make sure that we are trying to get myself situated here. It's not working. That we are also looking at the information concerning the adjusting entries that we need to do. Okay, so it talks about the depreciation expense. Notice we do not have a, we have accumulated, it's already there, but we're not talking about the depreciation expense for the month. So obviously we're going to have to add it in, right? So we're going to have to go ahead and put the depreciation expense for the store equipment. So, and we're going to make sure that we're entering all of this information in the accounts that we need to. So the depreciation expense for the store equipment is $6. So what we're going to do is we're going to actually enter that information into the spreadsheet. So what we would do is you would go ahead and come down here and you would enter then, for example, depreciation expense for store equipment. Okay, and it is $6. So you're going to debit this because it's an expense. You're going to come all the way over here. Now what I'm going to do though is I'm going to put an A on it so that I know that I've already done problem A so that I can also show where I've debited it and credited it. So I'm debiting the depreciation expense because number one, it's an expense. So I'm debiting it for how much? It says that I'm going to debit it for $6, right? So I'm going to bring it over, 600. There we go. I've debited it. Now I need to credit it. So I'm going to go back up to accumulated store depreciation, right here. I'm going to go over to the adjusting columns, and I'm going to go to the area where it says the adjustment and enter 6.6, actually not the point, just 6, and then 00. Okay, I need to make sure that I put A here as well. So remember what that $6 refers to. All right, now for B, it says that we're now going to have an insurance expense. Again, expensing it, and it says that it expired. So notice where we have the prepaid insurance up here. Okay, so we're paying now the month, and it says that it is for $3. So here I'm going to add then the insurance expense, and this is going to be B, again debiting it because it is an expense. Going to be for $3. And now I'm going to credit the insurance, prepaid insurance expense here. Oops. For $3. Or 300. Okay. Then it says that we're going to go ahead and do the store supplies on hand. Notice, on hand means that they've already taken the inventory and they only have a total of $5 left. So if we look at the store supplies. We begin with $10. So now we only have how much? $5. So again, we're going to come here and show that we have store supply expense. And this is going to be C. Again, it's an expense, so you're going to be debiting it. And then what we're going to do, let's just put C. And then what we're going to do is we're going to go up to the store equipment. And remember, store equipment, I'm sorry, it's not 10, it's 20. When we go to store equipment, we have $20 here as far as the balance of how much we've got. It's saying that the store supplies on hand is now $5. So here we're going to go into the credit area. We're going to put C, and we're going to place $5. Keep doing that. Now, the last thing that we're going to do is wages owed but not paid. For there are an expense in the old year of $8. So we're going to show here again that it's wages, because that's what they're saying, wages payable. Why is it payable? Because we're not paying it yet. So we're going to debit again. Actually, no. Wages owed. Wages owed but not paid for are an expense in the old year. Okay, they're an expense in the old year. So what we're going to do then is we're going to then debit the wage expense. Sorry. It's still a wage expense. Okay, and we do have the account up here. So we're going to debit the wage expense for, what did we say, $8. Because it's an expense. And we're then going to go ahead and place it in the account of wages payable because we're not going to pay it yet. So we're going to credit that account. And remember again, because it's an expense that's occurred during that time frame. So we owe it. And this is going to be D. Of $8, but on the credit side. All right, and this is D. Now that we finished doing that, we're going to bring over our adjusted balances and making sure that they're in the correct areas. So for cash, we have $4. For accounts receivable, we have $10. For prepaid insurance, we have $7. Or do we? No, we don't. The reason why we don't is because, remember, we have the trial balance. We have $7 right here that you'll see. And now we're going to credit it because we've already expensed it out, which means that now, instead of having the $7, we have what? You now have $4 instead. Store supplies, didn't do anything with those, so we still have those $10. Here, store equipment. Remember, this is the one where it says that we had the supplies on hand. So we started with $20. We only have $5 left. So if you subtract 5 from 20, that means that now we have, okay guys, I'm sorry, I had to fix my error. So it was in store supplies because I went back and I checked it, store supplies on hand. So when you have your store supplies, you have the $10 to begin with. We only have $5 to end up with, so we've used up $5. So our balance then, when you subtract 5 from 10, we end up having $5 left of the store supplies in inventory. We did not do anything with the store equipment, so we still have those $20. Okay. Here, accumulated. Okay. So because we're accumulating or we're totaling it up, we had a balance of $6 before. Now, since we're adding the accumulated depreciation, we now have a total of $12, or the amount of value that we have decreased our equipment by in 2 months. Okay, December and now in January. Then for accounts payable, we didn't do anything for that at all either. So we still have the $12. We didn't do anything for the capital, still same amount. We have the same amount for the withdrawals of $3. Okay. Revenue from clients is still 46. Okay. And I think, hold on. $14. Revenue. Okay, so I went ahead and I added all of this that's here, making sure that I also added some of the um, items that we needed to, which were the borders, so you could tell what was going on. Sorry, I was silent, but I was just making sure that everything was there. As I stated, you have your revenue here, then you start putting in all your expenses, right? And you come up with your expenses of being $38. Now, you subtract your $38 from your $46, and guess what? You end up with a total revenue of $8. Okay? And then when you add the 38 plus the 8, you end up having $46 again. So showing how you are balancing out your equation of 46 on either side. All right? And I'm just going to go ahead and add continue your border here so that you can see it, which all I did was right click as you were seeing, format cells, border. I decided to choose that big thick one, then go ahead and click on the bottom portion and voila. Okay, so now I can tell where that is. Now for the balance sheet, all we're going to do is add the assets, right? Assets, your liabilities, and of course your owner's equity, and see where we're at. So we know that we made at least a net income of $8, right? So here we go. Okay, so here we're showing on the balance sheet where we've got your cash, accounts receivables, your store supplies, and of course your store equipment. You have your accumulated depreciation, your accounts payable, and your capital and your withdrawals as well. Notice the $8, we had to put it in because it's a wages payable as well. So when we go ahead and bring everything down, what you're going to see again is going to be on the balance sheet. Here you're going to see $46, right? Here we add everything together. And you're going to see then the $38 here. However, we go ahead and we add then the $8 from the net income that we have here. And we add it, though, to this other side. Notice how we go back to our $46 to make sure that we are now balancing everything out with our adjustments, with our new trial balance, and with our adjusted trial balance, creating then the actual income, the financial statements that we needed to have. Okay, this is basically it, guys. All right, for your demonstration. Sorry it took a little long, but again, we added everything that we needed to add in, making sure that everything was there. If you have any questions, again, go ahead and contact me and I'll see you guys on the flip side.